Good morning, everyone. Well, the U.S. trade deficit usually isn't market affecting. In fact, yesterday's U.S. trade data for November didn't have an immediate impact on the FX market. But it gradually lifted the dollar as economists started to consider its implications for growth. The deficit narrowed sharply as exports reached a record high and imports declined. The important point for the FX market yesterday was that many economists revised up their fourth quarter GDP forecasts due to the improvement in the trade balance, since net imports are a drag on GDP and net imports are shrinking. As those revisions started filtering into the market, the dollar strengthened generally. This fits into the thesis I put forward in my 2014 outlook that the stronger growth forecast for the U.S. in 2014 would be one of the main drivers of U.S. dollar strength this year. The dollar is higher this morning against the Canadian dollar, the yen, and the Swiss franc, while falling against the Noki and the New Zealand dollar. The Canadian dollar was particularly weak as the country registered its 23rd consecutive month of trade deficits and the IV PMI plummeted. The trade data for Canada is particularly worrisome because it appears that the traditional relationship between a strengthening U.S. economy and rising Canadian exports to the U.S. is weakening. In case traders weren't convinced of the direction of dollar Canada, the Bank of Canada Governor Poloz said he was most worried about Canadian inflation undershooting its target. Though there could be some profit taking today, it looks to me like the Canadian dollar is set to weaken further long term. Now, yesterday we were discussing natural gas prices. They were extremely volatile yesterday as record low temperatures were set across the U.S., but forecasts are for unseasonably warm weather later in the week. The near February contract, the most active one, ranged between plus 2.9% in early New York trading. Imagine how well you could have done buying that. And down 1.1% near the end of the New York day. Early this morning, it was up 0.8% from yesterday's close. Watch the weather report for further information on that trade or further guidance. Here in Europe, the main indicator will be German factory orders, which are estimated to have risen 1.5% month-on-month in November. That's compared with a revised fall of 2.1% in October. A turnaround like that could be euro positive. In the U.S., the ADP reports forecast to show that companies added 200,000 employees in December, similar to 2015, 215,000 in November. That would be in line with the consensus forecast of around 195,000 for Friday's non-farm payrolls. Now, the relationship between the ADP report and the non-farm payrolls is pretty random, though, but it's the best guide we have. Also, the Fed releases the minutes from the December 17th, 18th FOMC meeting when the FOMC announced plans to start tapering off its bond purchases. The market will read the minutes closely for further insight into the reasons behind the decision and any clues about how quickly the Fed will wind down the stimulus. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Marshall Gittler, head of Global FX Strategy at IronFX, wishing you solid trading.